So what were the key takeaways from Jack D. Schwager? Well, the first thing is that there is no one single way to trade the markets. There are various different ways, and if you look at the examples that he showed, there is fundamental ways, there is technical ways, and there are people on both sides of the opposite spectrum. You've got guys that have made crazy money in the fundamental way, and you have other guys like Marty Schwartz that's made also crazy money in a technical way. So there is no one single way to trade the markets, but the key thing that he highlights and what made all of these people so successful that he interviewed was that they found a style and a system that suited them. It was part of their inner being, how they thought, how they responded, and the way that they liked to approach the markets. Some liked a busy environment, others liked a quiet environment, others used different types of methods and systems to trade the markets. But bottom line, they all had a style and a system that suited them. When you create your own style of trading, you have to build confidence in it. You have to build confidence knowing that that system will work, it fits in with your current lifestyle. You could be working full-time and you want to start trading on the side. You want to trade seriously and you need to start somewhere, but perhaps you still need to maintain your full-time job while you start trading on the side, and you need to have a system that fits around that. You can't be trading 5-minute time frames or 10-minute time frames with a full-time job because you're not going to be able to be in front of the screen the whole time. So that's just one example of creating a system that revolves around you, your current lifestyle, and how you can best approach the market to ensure that you have an edge over the market to remain net profitable. Here are some of the considerations that you should think about when creating and building your own trading system or finding an edge or a system within the market that's currently available and that works for you. You should think about the time frame. I've already highlighted this, but you can't be trading lower time frames like 5 minutes and 10 minutes when you have a full-time job. So time frame is absolutely critical. Myself personally, the lowest time frame that I trade is a 1-hour chart. And I've structured my trading that I can only place trades on the hour or within the hour, but it's the hours the lowest that I go, and that just works for me, and it just fits the system that I trade really well. So time frame is key, as well as the type of market you trade. Are you trading stocks? Are you going to be trading Forex? Are you going to be trading cryptocurrency, commodities, whatever it may mean? You need to consider the type of market that you want to trade, as well as the type of financial instrument. There are different types of instruments out there. You can trade futures. Forex is all traded in lots. You can trade the stock market in shares. You can trade CFDs. You can trade spread betting. There are various different financial instruments out there available to you in order to speculate the financial markets with. Over and above the considerations around the type of system, there are different styles of trading as well. And these are the types of trading that you might be already familiar with or that you've heard about. But the first one is position trading. This is the longest time frame in terms of trading. You are holding trades for a long period of time. It can be kind of blurred with investing. But for me, investing is anything longer than sort of 2, 3, 4 years. That's an investment you're holding. You're buying something to hold for the long term. Whereas position trading, you're holding something maybe less than a year or a couple of months. That is position trading. You're not taking a heck of a lot of trades. You're holding for a longer time frame, but it's not quite investing where you're holding on for 5, 6, 7, 8 years. You then get swing trading, which is what I do. And you tend to be holding on to trades. It varies. You can kind of hold on to trades sometimes for 1 or 2 days. It can even go as far as 5, 6, 7, or 8 days. Generally, the longest trade I've ever held on to was around 8 days. The shortest trade I've ever held on to is a couple of hours where I got stopped out of the trade pretty quickly. But my average holding time for a trade kind of fluctuates between 3 and 5 days. And that's essentially what a swing trader does. They hold trades overnight. They take several trades within a week or a month, but they're not getting in and out of trades on a really short time frame, which is where day trading comes in. Day traders tend to take a whole bunch of trades within a day, and they exit all their positions by the close of day. They do not hold any positions overnight. They close off any trades, they bank their profits or their losses, and they start afresh every single day. And last but not least, on the shortest time frame is scalping. Scalping, people are taking advantages of small little price moves within the market, and they are trading large samples of trades in a very short period of time, and they're taking many trades within a day. And all they're doing is they're taking lots and lots of little trades with small little moves, and then they aggregate that all up together in order to make a profit. Scalping definitely can make money, but you need to know what you're doing, how to do it, and it also incurs a lot of trading costs and so forth. So the further down the list that you go, the more experienced you need to be. Most people are probably quite comfortable with position trading from an investment point of view. Then those that are wanting to be far more active in their trading, you would find those that actually trade for a living, or those that want to make some serious profits from their trading, fluctuate between swing trading and day trading. And those that are sort of really aggressive and it suits their personality type, they would be looking to scalp the market and do scalp trading. So those are the different types of trading styles that you get, the considerations to think about, and remembering that there is no one single way to trade the market. All you need to do is find an edge that works for you and that it fits for you and that you can build confidence in it.